In Canada, getting the classification right for employees and contractors is a big deal. It impacts how businesses handle payroll, deduct taxes, and follow employment laws. Misclassifying someone can have serious consequences, including back taxes, penalties, and legal issues. Imagine a scenario where a company treats a worker as an independent contractor, but later finds out they should have been classified as an employee. This could lead to significant financial setbacks for the company, potentially jeopardizing its stability. Correctly classifying workers ensures that they receive the appropriate benefits and protections under Canadian law. For instance, employees are entitled to certain rights and benefits such as minimum wage, vacation pay, and employment insurance contributions, which are not applicable to independent contractors. By understanding the distinctions between employees and contractors, businesses can create a fair and compliant work environment while avoiding potential legal and financial pitfalls. This clarity is essential for both the well-being of the workers and the sustainability of the business. An employee typically works for one employer who dictates their work hours, provides the necessary tools and equipment, and has the right to direct and control their work. They receive a regular salary or wage and are entitled to statutory deductions like income tax, Canada Pension Plan contributions, and employment insurance premiums, which are typically withheld by the employer. For example, a cashier at a grocery store is considered an employee. They work set hours, use the store's cash register, and follow instructions from their manager. Their income tax, CPP, and EI contributions are automatically deducted from their paycheck. In contrast to independent contractors, employees are generally considered to be more integrated into the employer's business. They form a closer relationship with the employer, who has a greater degree of control over their work and how it is performed. The determination of whether someone is an employee goes beyond just the title given to them. Canadian courts and regulatory bodies, such as the Canada Revenue Agency, look at a variety of factors, including the degree of control the employer has over the worker who provides the tools and equipment, and the worker's opportunity for profit or loss, among other factors. Unlike employees, independent contractors in Canada are self-employed individuals or businesses that provide services to clients on a contract basis. They operate independently, have the autonomy to set their own hours and fees, and can work for multiple clients simultaneously. Think of a freelance writer who works with different publications, setting their own rates and deadlines. They manage their own taxes and are responsible for their own expenses, such as purchasing a laptop or software. Contractors are responsible for their own income tax remittances, including both the employee and employer portions of CPP contributions, if applicable, and are not eligible for benefits like employment insurance. This means they need to manage their own tax obligations and save for their own retirement. The key distinction between independent contractors and employees lies in the level of control and independence they have over their work. Contractors have the freedom to determine how, when, and where they complete their work, while employees are generally subject to the direction and control of their employer. Section 4. Payroll and tax implications. The differences between employees and contractors have significant implications for payroll processing and tax obligations. For employees, employers are responsible for deducting income tax, CPP contributions, and EI premiums from their pay and remitting these amounts to the CRA. Employers are also required to make matching contributions to CPP and EI. Contractors, on the other hand, are responsible for managing their own tax obligations. They are required to file their own income tax and make CPP contributions as both the employee and employer. They are not eligible for EI benefits. These differences highlight the importance of correctly classifying workers. Misclassifying an employee as a contractor can result in significant financial penalties for businesses, including back taxes, interest, and penalties. Section 5. Determining the correct classification. Determining whether a worker is an employee or an independent contractor is not always straightforward. The CRA considers several factors, including control, who controls how, when, and where the work is done; tools and equipment, who provides the tools and equipment needed for the work; financial risk, can the worker realize a profit or loss from the work; integration, how integrated is the worker into the company's operations. If you are unsure about the correct classification, it is advisable to seek professional advice from a lawyer or accountant. They can help you review the specific details of your situation and make a determination based on the CRA's guidelines. Properly classifying workers is not just about avoiding penalties. It's about creating a fair and transparent work environment. By understanding the distinctions between employees and contractors, businesses can ensure they are meeting their legal obligations and treating their workers fairly.